wrapped up a really solid 2020. Our enterprise business was a record year for us. Q4 grew 7% year over year, despite the challenges that the pandemic posed for us. Our cloud provider business grew for the full year. Even our service provider orders were up all year. So in fact, I think we're firing on all cylinders right now. We've created a really solid base for ourselves with our worldwide service provider footprint. And now we build two additional growth vectors for the company, the data center and the AI-driven enterprise, both of which are software-led. And I think our differentiation, the technology we have here is honestly second to none. I'm very excited about this year. What we're doing with our AI-driven enterprise solution is essentially having the network run itself, leveraging AI to make the experience of the network operator and the end user far better. With ServiceNow, we were able to crush the number of network trouble tickets that they see on a day-to-day basis by 90%. That frees up the time of the IT professionals that are working at ServiceNow. And of course, it delights the end users that are using the network for a variety of different use cases and applications.
What is up, guys? Welcome back to the channel. Juniper Networks is a networking hardware manufacturing company, and their CEO, Rami Rahim, went on CNBC to promote their business on software-defined networking technologies. The demand for hardware and software solutions for cloud services is going strong, so for the comparison today I have picked 3 companies working in this industry. The picks are Cisco Systems, ticker symbol CSCO, Juniper Networks, JNPR, and Extreme Networks, ticker EXTR. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price-to-earnings ratio, annual revenue growth, price-to-sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end, the company with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, a company with share prices furthest away from the average target to the lower side gets a point for this factor. For Cisco Systems, we have 21 price target of analysts. They range from the lows of $45 to the highs of $64 per share. The average is at $53.10, and the current share price is at $50.59. So there is still around 5% room for the current price to reach the average target of analysts. For Juniper Networks, we have 17 price targets of analysts. They range from the lows of $19 to the highs of $31 per share. The average is at $26, and the current share price is at $25.98. So there is only around 0.1% room for the current price to reach the average target of analysts. For Extreme, we have 4 price targets of analysts. They range from the lows of $10 to the highs of $14 per share. The average is at $12.75, and the current share price is at $10.77. So there is around 18.4% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with the highest percentage, Extreme Networks gets the first point. Second factor is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price-to-earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price-to-earnings ratio gets a point for this factor. For Cisco Systems, the forward price-to-earnings is at 14.79. Forward price-to-earnings for Juniper Networks is at 13.73, and Extreme Networks has a forward price-to-earnings of 14.35. Forward price-to-earnings ratios are in the table, and with the lowest value, Juniper gets the first point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, And in the end, the stock with the highest sum gets a point for this factor. Annual revenues for Cisco Systems, and going into 2018 there was an increase to $49 billion US, then into 2019 there was another increase to $51 billion, and going into 2020 there was a decrease to $49 billion. So with 2 increases and 1 decrease in annual revenues, we have a sum of 2. Annual revenues for Juniper Networks, and going into 2018 there was a decrease to $4.65 billion US, then into 2019 we had another decrease to $4.45 billion, and into 2020 revenues stayed flat at $4.45 billion. So with 2 decreases and 1 year going flat, we give it half of a point. Revenues for Extreme, and going into 2018 there was an increase to $983 million US. Then going into 2019 there was another increase to $995 million, and going into 2020 we had a decrease to $948 million. So with 2 increases and 1 decrease in annual revenues, we have a sum of 2. Results for the annual revenue growth factor are in the table, and with sums of 2, both Cisco and Extreme each gets a point. Fourth factor is the price to sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. For Cisco Systems, the price to sales is at 4.45. Price to sales for Juniper Networks is at 1.88. And Extreme Networks has a price to sales of 1.43. Price to sales ratios are in the table, and with the lowest value, Extreme gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A higher E shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Cisco Systems, the return on equity is at 27.14%. Juniper has a return on equity of 4.68%. And for Extreme, the return on equity is minus 114.9%. Return on equity percentages are in the table, and with the highest value, Cisco Systems gets the second point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4. And in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Cisco Systems, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we have a sum of 4. Quarterly earnings for Juniper, and Q2 of 2020 beat expectations, Q3 met, Q4 beat expectations, and Q1 of 2021 beat. So with 3 beats and 1 meet in earnings, we have a sum of 3.5. Quarterly earnings for Extreme Networks, and Q2 of 2020 beat expectations, Q3 beat, Q4 missed expectations, and Q1 of 2021 beat. So with 3 beats and 1 miss in earnings, we have a sum of 3. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 4, Cisco Systems gets another point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For Cisco Systems, the current ratio is at 1.61. Current ratio for Juniper is at 1.62. And Extreme has a current ratio of 1.01. Current ratios are in the table, and with the highest value under 3, Juniper Networks gets another point. The last factor we have is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield shows that profits are shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the company with the highest dividend yield percentage gets a point for this factor. Cisco Systems is paying an annual dividend of $1.48 per share, which is a yield of 2.89%. Juniper Networks pays an annual dividend of 80 cents per share, which is a dividend yield of 3.09%. And Extreme Networks is currently not paying any dividend. dividend yields are in the table, and with the highest percentage, Juniper Networks gets another point. We can calculate the results, so Cisco Systems has 3 points, Juniper Networks 3, and Extreme Networks also 3. To break this tie, let's try removing the least important factor, which in my opinion is the dividend yield. If we do that, then Juniper Networks only has 2 points left. So let's remove Juniper from the equation and compare the remaining 2. So for the Analysts price targets factor, the point goes to Extreme. Forward price earnings point to Extreme again. There is a tie for the annual revenue growth, so no point is assigned. Price to sales ratio point to Extreme. Return on equity point to Cisco. Last 4 quarterly earnings point to Cisco again. Current ratio point to Cisco Systems. And for the dividend yield, a point to Cisco. We can calculate the results, so Cisco Systems has 4 points and Extreme Networks 3. This means that Cisco is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you: have you been buying or holding any of the companies mentioned? Share your thoughts in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider the options on Patreon. Last week I already did a comparison on several cloud software companies, and we have 36 weeks worth of investing with the Revolut stock portfolio. If you are interested in any of those, then click on the video currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing you all in the next one.